Hey folks, on today's Rebel's Edge, special hosts Jeff Garbaz from the Rebel Squeeze Play and Justin the Prodigy Nugent, they're standing in for me, Pete, and John while we're traveling. Also up next, Nvidia to the moon. Mark Rebellion's favorite AI darling hits a $4 trillion all-time high valuation. First company to reach that incredible milestone. And also, Trump trade letters and tariff warnings continue. But do markets even care? All of that coming up next and more in today's Rebel's Edge.
Welcome to the Rebel's Edge. Obviously, you just heard from Mark. John, Pete, Mark are all out, but you have us. I am Justin Nugent, and we have the incredible Jeff Garbaz of the Rebel Squeeze Play and the Rebel Setup on with us. We're so thankful to have him. Jeff, how are you doing today?
Good. How are you?
I'm doing awesome. And, you know, I really just want to jump right into it because Mark teed it up so well. The macro minute really fits best for me as Nvidia becoming the first $4 trillion stock. You know, we have talked a bit about this long ago in the Rebel Roundup, saying Nvidia, honestly, to me, is probably more deserving of that than Apple, maybe even than Microsoft, and then a lot of other Mag 7 names, just because they are really legitimately innovating and not just adding a new lens every year to a new phone. But but I don't know if that's a controversial take. What do you got, Jeff?
You know, I think the biggest thing about this kind of fits with like all of our work in that, you know, the stock corrected into the low in April. A lot of people, when it got down to like $100, were ready to get rid of it. And we talked a fair amount about it on the way back up again, which I think is great. And I think that, you know, stocks like this, you do get opportunities to buy them. And now we've had, you know, effectively a 60% move, a little bit more off of its low. So I love it.
Off of a massive stock too. And yeah, I mean, you're exactly right. We talked a ton about this. We've traded the hell out of this. We were in the Rebel Roundup. We were in the 165 OTM calls. Just a representation, by the way, that you can buy certain strikes of call options and just look for a pretty big overnight pop to make a pretty sizable quantity of money. You know, really so many things that you can do with options. And that's why it is not an option to just trade shares of stock. And, you know, I know in a lot of our other services, including 3 at 3 Pro, we've traded this as well. It's really, Mark called it Market Rebellion's AI darling. I think that is a great term for it.
Yeah, people used to like call the you know, the stocks the MAGA stocks. And I kind of have modified that acronym to be Magnet. The M's are Microsoft and Meta. The A's are Apple and Amazon. The G is Google. The N is Netflix and Nvidia. I put an E in there just for the hell of it. Electronic Arts, and then the T is Tesla. But if you look at them right now, I mean, Nvidia and Meta are probably the two strongest right now in this particular cohort that has such contribution to the return of the indexes that you got to be looking at them, because it's going to be pretty rare to find like at least not 1 or 2 or 3 of them doing well at any given point, you know. And it's pretty rare to find all of them doing poorly. It's not going to really happen.
Yeah, absolutely. I'm going to kick it into the fantastic futures here. And I actually have 2, but it's really 1.5. So yesterday we talked about Ethereum. You're going to hear a little bit more about Ethereum in a second. But I had passively mentioned something that I know Jeff knows a ton more about, which is short interest. I had seen a chart that had said that traders had put up a pretty sizable short position in Ethereum futures. And I had sent that to Jeff at the beginning of the show, and I wanted to just get Jeff's raw take on the short positioning in Ethereum. Jeff, what do you have?
So what we do is we track short interest on stocks and on ETFs. It's kind of just a simple process. We look at the range of the short ratio through time, and then we look at that range and build an intensity level. So right now for the iShares Ethereum Trust ETF, its short intensity is 78%. Now, it doesn't have a huge short ratio. It's 0.74, but it never has had, because it trades so liquid. But we can see that people are making a bet against it, and that bet is really not working out. They started adding at the end of March, and it's just not working in their favor. And you know, we were able to do that a couple of years ago with GBTC as well, and that did a good job for that. And then ultimately, other things have replaced it. You know, so. But regardless, I really do like Ethereum here. It looks really interesting to me from that standpoint.
That's interesting. Okay, I wanted to know that I wasn't crazy. You are the master of all things short interest. And anytime that I talk about it, I feel like I need to get your input so that I know that I'm not speaking about something that incorrectly. So that was my first thing. My only other thing is super quick. My future is the ES, and that is just the SPY, the SPX, the S&P, whatever you want to call it. Over the last couple of days, I've just been saying, hey, I'm quite bullish for the end of the year, for sure. But, you know, yesterday we talked about, hey, today on the brink of some of this, these tariff announcements that we're going to get, I think it's worth maybe letting off some of that short-term exposure into that pop. We did get a pop at the outset of the day, and short-term exposure to me means things that expire this week, things that expire on the 18th, particularly things that are literally SPY calls. I would be selling those into this pop and maybe just using that capital to fund some more longer term positions, because I'm ultimately extremely bullish on the end of the year. It's just that right now I think we're probably going to come down and retest that 613 in the SPY, former all-time high. We have not done that yet, and that is where I would love to be re-engaging on short-term positions myself for a nice classic break and retest.
You know, what's kind of interesting is some people have called this week Liberation Day Part 2. You know, after he came out on April 2nd, and then April 3rd, the S&P lost 4.84% in one day. And this week, for the week so far, we're down less than 1%. So it kind of shows you that the market is kind of adjusted to this stuff pretty well. I agree with you. Sideways, I mean, getting down to 613, that would not be a big problem as far as I'm concerned in the overall mix of
about 1%.
Where stuff is going right now. It's fine. So, but I think to me the most interesting thing is the fact that you know, he started doing this Monday morning. I didn't expect. I write a piece every week called The Week Ahead, and one of the last things I expected was him Monday morning to come out and start naming countries, what tariffs are going to be, etc. But he did it. You know, I thought he would do it on Wednesday. You know, and we'd get a pass for maybe Monday, Tuesday. No such luck. And I guess he's got a couple more that have to come out today. But then I kind of feel like, okay, we're past that point in time. Now the next point we got to look to is August 1st, and maybe we get back to a normal market for a while. I don't consider these tape bomb stuff to be normal at all. It's atypical, and what's interesting is it's been shorter each time since Monday for the market to kind of come back up to where it was. So it's going to be. I agree with you on that, but this week could be a good point to do that.
Yeah. Just for the short-term exposure stuff, you know. All right. Let me move into our first stock of the day. This was one that I specially picked out for today because I mentioned it yesterday, and I talked actually about it a bit on Friday as well. This is SBET, SharpLink Gaming. This stock is not for the faint of heart, everybody. That's the first thing I will tell you. This is all over the place, all right? We talked about this over the weekend and on Friday in the Rebel Roundup as well. Stock was at $12 and change. I said, hey, I love positions here, and I specified over the weekend specifically looking at 20 strike calls. Now, we don't always buy out of the money, and in fact, a lot of us don't at all, and that's okay. Personally, I think that every option is a tool, and there's a different tool for every job. This particular trade, where there's a really solid gap up to 29, I really thought that the risk reward was just excellent here. This is an Ethereum treasury name for anyone who doesn't know. We had unusual options activity in this name as well, with the stock at about 13 on Monday. And whether you were in our unusual options activity services, whether you're in the roundup, whether you're in the market outlook, if you took any of these ideas, well, yesterday the stock was up 25% at the highs. Today the stock is up something like 6.3%, but at one point it was up, I think, 17% on the day. It is cruising to the upside in the most jagged motion, and I like it a lot. The only thing that I would tell you is that with any high flyer, just make sure you're DDAing. Just make sure that you can stay in. I like it to 29, but that doesn't mean that you can't be trimming, rolling, taking some profit. Jeff, this is actually one that we talked about on the cocktail hour. This is where you showed me the parabolic SAR as well, and that was when it was trading all the way up at like 120. Do you recall that, and what are your thoughts?
Yeah. I mean, parabolic SAR is a great way to look when something has a crazy move one way or another. And right now, it's been in a down phase for a pretty good time from that 120 peak, but it looks like it's actually getting ready to put in a turn and go positive down here. So it's done it for a pretty good period of time. What I find interesting is the shorts have just come into this thing, like in the last reporting period. So the last short interest data that we have is from the 1st of June until the 15th. We get it short interest twice a month, and they're now roughly 3 million shares short in this thing. Yeah, it trades a lot every day, but still it's got a short ratio of 3.41 on it. So it takes the shorts over 3 days to cover on it. And a cool thing for Friday is, Thursday night we get new short interest data. So Friday on cocktail, we can take a look and see where the shorts have gone on this thing. But they're clearly helping the stock move higher here in the last couple of days, for sure.
Yeah, for sure. Well, I love to hear that. It makes me happy. All right, the next stock that we're talking about is AES. This stock is up over 14% on some takeover buzz. These guys spiked after reports that it's exploring strategic options, a potential sale, thanks to some takeover interest from a major private equity and infrastructure giants. Suddenly, the bell of the energy ball here, and we did see some unusual options activity in here as well, if I recall. Just love when we can find UOA that identifies something like this before the news takes place, because there's really no other way to get in on something that is so headline driven like this ahead of the move. Jeff, what's your take on AES?
What's really interesting is the shorts came into this stock at the end of last year, added into March, covered a little bit, and then have added again in the last 2 months. And it's our short intensity is at 56%. So the shorts are probably contributing to a decent amount of its pop today. Only 3 days to cover, but still, if I was short this stock, I would be like, I think I need to be gone from this. And first of all, I just don't think these type of stocks, technically, where it's been basing at like it's been trading roughly between 10 and 12 since the beginning of the year. And every time it hits 10, it bounces off of it, goes up towards 12, kind of comes back. It's done that twice, and now it's done it a third time. I just don't see those being good short ideas right now. I mean, to me, like, you got to take stuff that's very lofty, kind of looks like it can't go up anymore. It's had a huge run, and that's where I'd look for shorts. I would not be trying to short stuff that's at 52-week lows and in a basing formation for a period of time.
Yeah, especially something that's so low dollar too. And I mean, oh my God, staying in a position after a takeover rumor short is just got to be a recipe for nightmares of red candles. I would not have a good time
Yeah.
being short that now. Let me take it to the next one. We're going to talk about AEHR test systems. They've got new AI testing tech, but right now the only thing getting stress tested is the stock price. These guys tanked after missing Q4 revenue estimates. They're warning the tariffs could bite them. Revenue dropped 11% year over year. Margins shrank. Pretty much they went down the list of every single bad thing that they could say on an earnings, and they just hit it all rapid fire. So the stock is down pretty considerably from that from yesterday, and that is they're in a rough spot. Jeff, what's your take on these guys? Do you like them or do you not like them here?
So here's where not just knowing about short interest is enough. So right now it does have a lot of shorts in it. It's got 89% short intensity, but what's really kind of a cool subset of what we do is we can rank how good or bad the short sellers are, and we do that on every stock. We're probably the only people in the world that do this. And what's interesting right now is the shorts actually make money a lot on shorting this stock. And so what I mean by a lot, they make money roughly 61% of the time. And that's out of 18 trades where it's had heavy short selling, i.e. above 80%. And their average gain is 18.5%. So I am never a fan of basically going long a stock where the shorts make money more than 50% of the time. I'd rather find a stock like, here's a great example, Visa. Every single time the shorts have tried to short Visa, they've lost money. So guess what? Until proven otherwise, every single time short interest gets high, I'm gonna want to play that stock from the long side using calls. You know, it's a given. But this is a tough stock because the shorts have proven that they can do a good job on this. And remember, stocks go up 2/3 of the time. So shorts have to do a lot of work just to kind of validate where they're coming from. And they've been able to do it on this stock.
That's really interesting. I love the concept of tracking who the specific shorts are, even if we don't know exactly who they are, and determining whether or not their thesis is really valid or whether they're good at what they're doing. And I know you have a thesis about the next stock. So if you don't mind, I want you to lead off the next one, which I know is going to be in Starbucks, because I want to hear what your thesis is on this one.
Yeah, so Starbucks kind of really interested me this morning because we saw that there were potentially bids for their China business to the tune of $10 billion, which is a lot of money. I don't care who you are. Putting an additional $10 billion in your cash account for a company is a big deal.
Yeah.
And what's interesting is this company was basically being run now by the former head of Chipotle, who's been known as a turnaround guy. And since the beginning of the year, shorts have been adding to their position, basically betting that he can't, turn it around. And now the short intensity on this thing is up to 92%, 3.8 days to cover on it. And if I was short this and all of a sudden I know that there's potentially a bid for $10 billion to separate that business and spin it off, and that Starbucks gets the benefit of that $10 million, I got to question whether I want to still be shorted or not. I mean, it really is that simple.
That's really, really interesting. So with a name like Starbucks that's so big, and we have some decent short interest in there, what you're saying is that the fact that they have this potential positive catalyst in the pipeline means that those shorts may want to start exiting their positions, right? And for anyone who doesn't know, to exit a short position, you have to buy back to close that position. Now, are you saying, do you think that this is going to be one of those kind of classic short squeezes that we hear talked about where stock starts ripping or having a pretty abnormally large move? Or do you think that this could be more of a sort of a melt up style of move?
Well, if we go back to our other example, that AEHR, and we look at Starbucks, you either have smart short sellers on a stock or dumb short sellers. And unfortunately for the short sellers, Starbucks is a stock that is littered with dumb short sellers. Historically, there's been 14 times it's had heavy short selling, which it has now at 92%. And historically, 71% of the time, the shorts get squeezed and they lose money. And the average return is 13% over. We also track the duration of this, and it's 92 days is how long it takes the shorts before they just give up. And they're like, okay, I lost my 13% and I give up. Coming into today, the stock was down 3.54, so the shorts were making money. So if we add the 13% to it, that would give us 16.5% upside on this particular name. So that means that there's, I mean, from an option standpoint, being able to make 16% in a call, like that's going to give us a really kind of good return, you know? So I just like this because of this idea. And look, today it got up to a pretty high level. It got up to almost $98 before it sold off when the market sold off, and now it's back down at $95.40. So it's kind of like stabilized a little bit more than I think it might be an interesting idea on the long side.
Yeah, it's at a really, really interesting spot too. Not to belabor the point about Starbucks, but I actually really like the spot that it's at here. That swing high on June 11th, that same level gets hit again on July 1st. We come up to it yesterday with this other swing high. Now that's exactly where we're sitting. And this is also the 200-day moving average, which has been a support for this stock before, which we were just trapped under ever since kind of the deepest part of that correction on April 3rd. This is our first time getting above it. This is a pretty quick way to come down and retest it. So we'll have to see if they can hold it. But if they do, yeah, I actually love this as a pretty tight risk trade, quite a bit, and especially for all the reasons you described.
What's interesting too is the head of Starbucks, Brian Nickel, he did a great job at Chipotle, obviously. Before he was at Chipotle, he was at Taco Bell. So this guy's an operator, you know? And I find it interesting that, like, the shorts want to bet against him. I don't know. I wouldn't want to bet. I wouldn't want to bet against him. I just think that doesn't make a lot of sense as far as an idea goes, you know?
Yeah, I completely agree. Before we go, you know, Pete and John and Mark are all off, and I'm not the expert on a lot of these sports, but I know we covered Wimbledon yesterday. And Jeff, you had another thing that you wanted to add in about Wimbledon. I know that you're a fan. Hit us with the sports today.
Yeah. So right now we're in the quarterfinals of the men's, and we have a great match going on right now. Sinner is playing Ben Shelton, who's an American. They've been playing for a couple hours now. Almost 3 hours, and they're only 2 sets into it. Sinner won the first set 7-6. Oh, actually, he won the second set too. Okay, so he's up 2 sets, 6-4. But this thing could go on for a long time. Djokovic is playing another one. He's up 6-5. And yesterday we had an American, Taylor Fritz. He made it to the semifinals, and he's playing Alcaraz, who is just a phenom. But what is interesting is if we go from the men's side, it's kind of like all the favorites. It's like the magnet stocks that we were talking about earlier. It's all the ones that people thought would kind of get there. But on the women's side, almost all the top women have been knocked out. and now we're down to the top woman, but we have a 13 seed, we have an 8 seed, and an unseeded Swiss Benzik, who's up for the semifinals as well. So it's been really interesting to see how people have been knocked out of this tournament, and so it's made it a really kind of fun event to watch. I kind of equate tennis and golf like stock picking, and you have your winners that typically get there, and then you have your up and comers, and we've had a lot of up and comers and a lot of upsets in this year's Wimbledon. It's been pretty interesting to see.
That's really exciting. That's very cool. One thing that I got for you yesterday, we covered the AI judges and some of the controversy there. Do you have any take about that?
Well, I mean, what's interesting is they've kind of replaced the whole judge system with AI.
Yeah.
They used to have umpires that would sit around and watch the whole thing, and that has gone away and been replaced by Hawkeye. And it's got the potential to get it wrong every once in a while. And it proves that like nothing is perfect, and that's why you have ultimately an umpire sitting above all this stuff. But yeah, I think what's really interesting about sports in general is just what you can do with AI and what you can do with analytics as well. It's changing just the face of sports across the board. The amount of stuff that you can mine to figure out how to improve players across just a myriad of sports is unbelievable. It really is.
And that's where we're going to wrap it up for today. Thank you so much for joining us, Jeff. You are truly incredible as always. Jeff's a master of so many things beyond just analyzing short interest and knowing where the hedges are hiding. You can get more of him in the Rebel Squeeze play and in the Rebel setup, the most important hour of the day, early in the morning. I'll be on that tomorrow. If you want to hear more of us chatting, check that out tomorrow. And with that, we are going to see you tomorrow with John and Pete at 1 p.m.
And Justin, I'll see you dark and early tomorrow morning.
Yeah.